Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining Real Estate Risk Report. I'm Lance Pederson. Today I am joined by Yonah Weiss. He is a cost segregation study expert. We'll let him sort of introduce himself here shortly. But I've seen Yonah is sort of also a master of social media. He's found a way to sort of make the rounds and befriend himself with many out there in the commercial real estate world. And so he catches my eye as well, where we have similarities. He's got his whole look going. I'm often the guy who's the guy wearing the ball cap with long hair. So people tend to remember me like I'm sure people tend to remember you, Yonah.
Right. Yeah. I was at a conference recently and the guy's like, you can never cut your beard, man. It's part of your branding. like, thank you. Thanks.
That's why you do it.
But I have my own reasons, but I'll take your advice.
Yeah, exactly. Yeah, no, it's all about the brand, Cool. Yeah. Why don't you just give us maybe a little intro, a little background on yourself, kind of how you got into the business and how you sort of found yourself becoming the cost segregation expert guy.
Yeah, absolutely. Thank you. First of all, thank you very much for inviting me, Lance. It's a pleasure to join you on your show. I hope to, be able to give a lot of value to your listeners. A little bit about me. I actually grew up in Southern California. I mean, that's probably not what you were looking for, but I didn't get my start in real estate until about 5 years ago. So without aging myself too much, I spent about 15 years after college as a teacher. And so it was really my passion was teaching. I have a big family, 6 kids, and, I love that interaction with people. And for me, I was never really big on finance and chasing money or profession or anything like that. I really just enjoyed doing what I was doing. I started a nonprofit organization to help, families and just kind of living life. And that's really what it was about. About 5 years ago, I kind of had a bit of a shift. A lot of things kind of came at me at once, and there's some real life changing moments at that time. But real estate was, for me, a really strategically guided pivot in my life to get into this industry. And since I've done that, I see things have just blown up and taken off in many, many different directions, many different ways. But, I started off as a mortgage broker, just learning the ropes, trying to get my feet wet, learn the industry, and did a lot of different things. A real estate broker, I was doing some fix and flips, just trying to learn everything about real estate there was to know from being on the ground. And recently, I'd say about 4 years ago, I got, which was pretty, not so far along into my career in the real estate industry, I got connected with this cost segregation company, Madison, which really they're a commercial real estate company in general, do a lot of other things as well, title, insurance, 1031s, due diligence, a lot of things in the real estate space. But cost segregation kind of spoke to me. And it was like, here's a way you can save taxes. Here's a way to help people save taxes, rather. And I was like, okay, well, it sounds really interesting. Let's learn about it. I started speaking to all my friends who were in the real estate industry and nobody knew about it, which to me was like a sign at that point. Well, here's something that just needs to be spread. Like the knowledge of this subject needs to be taught. And I'm like, well, I'm a teacher. This is a perfect fit for me. And so literally, you asked, how did I get involved, become like the expert? I literally just started putting out content, getting out there in front of people. People started to interview me because this was a subject nobody knows about. And even accountants, a lot of accountants don't really know about it. And it's not talked about. And if those accountants do, many accountants are not necessarily the best teachers and can explain stuff in layman's terms. So long story short, that's what I've been up to.
Yeah, no, I mean, that's a great story. And I think that, I think you're right. It's one of those things that it's pretty complicated. Obviously it's near and dear to most Americans' hearts, which is, how do we reduce, having to pay taxes, right? Like that's death and taxes are the two things that we know are inevitable. And, and we're trying to figure out how to, avoid either happening to us. So, Yeah, and I think that's great. And I see the parallels too. For us, we are really on the Verivest side. My day job is we're fund administrators, right? And it's another one of those things where kind of like cost seg, it's misunderstood. People don't know what it is. They think it's just like outsourcing your accounting or something, which of course it is, right? And I like you, I'm passionate about it because, in your case, you can help people save money on their taxes. In my case, I'm like, if someone has their investment vehicle administered by an independent third party, we can avoid you finding yourself in a Ponzi scheme or, being defrauded. Right. And so I'm passionate about it because I'm like, it's just a no-brainer, right? It's a no-brainer. It's a win-win-win for everybody if they do it. But, at the same time, it's misunderstood. And so, the strategy has to be educating. You have to go out and you have to simplify it. You have to break it apart and, and explain it. And so much in my case, I'm renaming it, necessarily have to rename cost seg, but I'm like, fund administration's hack named. It's just people, they don't even think about it. So I'm like, it's a monitoring provider. It's an investor servicer. It's a financial statement preparer, right? Those are just more layman's terms. You're like, oh, I see. Okay. Like that makes more sense. And then, adding to it. So with that said, back to the cost segregation study, right? Fundamentally just give the simplest sort of definition of what's happening once again, so as to not, skip ahead and add to the confusion. What really happens? So just give us an example of what the cost segregation study does.
I think the best example is just to kind of understand depreciation in general first, because essentially what we do is a very kind of detailed and advanced form of depreciation, which in of itself is a tax deduction. It's probably one of the best advantages to real estate investing, above and beyond any other investment vehicle there is this tax deduction called depreciation, which allows you to essentially take the value of the property that you purchased and deduct the entire amount from your income taxes, right? That's right. Depreciation. However, it's done over a long period of time. It's not like you can take the whole lump sum at once. You're taking it over, kind of an arbitrary 39-year period or 27.5-year period for residential properties. And what we do is accelerate a certain portion of that depreciation. We can identify things in the property with an engineering-based study. So it involves construction engineering, involves accounting. And what we do is essentially take a huge portion of that, maybe 20, 30% of that overall tax deduction, and you can front load that up into the first year or the first 5 years. And so what you're doing is you're creating a large tax benefits, tax deductions, which increases your cash flow, increases the amount that you can use to reinvest. So in other words, it's really an investment vehicle, and it's a tax strategy that allows you to create more money.
Yeah. So in other words, if I invest in a partnership, and if it just uses the standard straight line depreciation methodology, and it's a income producing asset. So I've got this income being allocated to me that the IRS is going to tax more often than not as rental income, as ordinary income, right. So it's going to be taxed at the highest tax rate possible, the last dollar of income. The standard depreciation that's allocated to me may offset a good majority of that. Or a good chunk of it, let's say, 60%, something like that. But then, so once again, that's what makes investing in real estate partnerships, it's tax efficient, unlike something else that doesn't have depreciation to offset the income. But in the case of the sort of cost seg study for the passive investor, because there's really those two categories, right? You've got the passive investors who aren't, and then you've got the real estate professionals who the IRS sort of gives different benefits to. As it pertains to this particular, a cost segregation study. So oftentimes, do you find that it might end up being where when you accelerate depreciation, it actually offsets all of the income and there's actually more left over, meaning that you now have tax losses that you can't even use in the current year, right?
Yeah. Right. Yes, absolutely. So two things I'm going to just kind of reiterate what you said, and you're right on the money there, right? There is oftentimes when you're doing a cost segregation study, you're getting more deductions in those earlier years. So you're actually getting more deductions than you have income, which creates a passive loss. It creates that you not only are you not paying taxes on the income produced from your real estate investment, but you're actually having extra losses. Now, you mentioned something called a real estate professional, versus a passive investor. Now, I want to just clarify those two terms because they're not necessarily mutually exclusive. A real estate professional is someone who spends the majority of their time in the real estate trade or business. So they own rental properties and they're working on those rental properties. However, whether they're, a broker or they're a manager, the operator, whatever that is. Now, and that, for the most part, if you're investing as a passive investor, you may not be that. Okay, you're probably working a full-time job or what have you, and are investing in these syndications or these funds. However, there are plenty of people who do qualify as real estate professionals that also may be passively investing. I know a lot of my clients do both. They not only invest in their own deals, but they also invest in other deals as well, which allows them, or brokers, real estate brokers, that they may be spending the majority of their time brokering. They're considered real estate professional. They can get huge tax treatment if they just invest their earnings into, rental property, real estate, income producing properties. But yes, if you are not a real estate professional, it's just the extra depreciation is going to create, as you mentioned, a passive loss. It's going to create kind of a negative bank account on your tax return that doesn't allow you to use all those deductions in the current year, but they do carry forward and you can use them in future years.
Yeah, extra. Yeah, and that's where the real benefit, if you do qualify as a real estate professional, the beauty of it is that it can be used to offset other ordinary income.
Right. The current year.
Yeah, in the current year. Yeah. So that's the beauty of it. And of course, it's, if you can qualify, then it's probably worth doing. That's a whole different discussion. Right. So I mean, that's great. And then obviously, I mean, if the asset is sold at some point in the future, then, as always, there's going to be sort of the recapture. But the benefit is that usually the recapture is going to be capital gains tax rate, which is more often than not lower than the taxes you're paying on ordinary income. So
correct.
It has a lot of great benefits. So once again, like you probably, figured out 5 years ago, then why the heck isn't everyone doing this? So, what does stop people from doing it then? I mean, I know that there's an investment, obviously, to have the cost segregation study done is, it's not super expensive, but it's not,
sure. There's a fee involved, of course.
There's a fee involved. Yeah. I mean, it's $10,000 or $5 or $15 or something like that. I mean, it's not. So why don't people do it?
I think the main reason that I've seen, and I've literally over the past few years spoken to, well over 1,000, if not thousands of people, and of those, the vast majority didn't even know about cost segregation beforehand. And so it comes back to the question, well, why aren't people doing it? This is why I'm so passionate about it, because people just don't know about it. Like, that's literally the number one reason why people aren't doing it. They just don't know about it, or they don't understand it. And a lot of times people assume that since it's a tax thing, your accountant is dealing with it, right? People think taxes, right? Most people's brains shut off when they think taxes, or they hear something about taxes. Like,
I know.
Yeah, okay, right, tax. I have an accountant. I'll talk to my accountant about that. Now, what happens if you go into your accountant and you ask them about cost segregation? Believe it or not, 90% of accountants, in my experience that I've spoken to, or clients that have spoken to their accountants about, don't know what it is. That means they can't possibly be helping you to do this method or to use this strategy if they don't even know what it is themselves.
Yeah.
Which is crazy if you think about it, because it's part of the tax code. This is not like some, weird tax evasion, tool or something that, you find on the black market. This is in the tax code, is made up by the IRS, is governed by all by the IRS. So it baffles me.
Yeah, no, and it does me as well. And we've recently launched a tax practice inside of our company, right? And this is the reason why it goes back to that whole, like, there's just, and I don't use this word as like a bad word, but it's just ignorance. It's the lack of knowing. Like, it's just there's lots of ignorance in the world of, in every facet, right? And so, which once again, it requires educators, people who are willing to inform and to explain and to educate and to help people understand, about these things and the benefits of them. And I think for us, it's the same thing as saying, our ability when we can sort of bundle services and add more value, right? And then it puts us in a position where, and I get it, as sort of now having a tax practice and those sorts of things. I mean, the last thing in the world I'd ever want to do is start a cost segregation study division. I mean, like, right. It's a whole different thing. Yeah. Right. I mean, it's, like you said, it's more of an engineering thing and those sorts of, it's exactly different enough. And of course, when it's different, it's just one of those things where is the CPA, especially the way that whole thing works, is that their whole world is crammed into a 3-month period, and they've got all this stuff going on. The last thing to do is like, hey, hang on a second. You guys should get a cost seg study, right? I mean, by the time they finish what they're doing, they basically take a deep breath, go on vacation, come back. And it's just this, it's odd, well, right? And
to give them the benefit of the doubt, I think it's important to kind of, point out, and I have nothing against accountants. I don't mean to come off like that, but the tax code is huge, is massive, and nobody can possibly specialize in every tiny component of that. And to another really important point of this is to understand that there's a very big difference between an accountant and a tax advisor. And I think most people have accountants, which means they are punching numbers. They are plugging in numbers, and they are, filing those, just taking those numbers, putting them into the boxes, the proper lines. A tax advisor is someone who's going to be proactive and trying to find strategies to help you pay less taxes. And oftentimes, most accountants don't fit that role. Nothing against them. It just happens to be they're two different roles.
That's exactly right. They've been engaged to prepare tax returns, not to advise on, your tax situation and how you could, reduce or, do things differently. And that's why for us as administrators, and this is where I've seen is that everyone's talking about the benefits of depreciation as the selling point. Invest in my deal because you get the depreciation benefits, but then there is no cost seg study on it. And then what I find interesting is that it doesn't show up. One, most sponsors don't even prepare and send capital account statements to their investors. They wait to get the K-1. So they don't even ever see the benefit because it shows up on some tax form, 3 or 4 months after the year's over, meaning one couldn't even do anything with that information if you wanted to, right? And it's like a big surprise. And so really no one's doing any tax planning to speak of. And, so for me, I'm like, this is where I'm like, we're going to have a tax practice. We're going to help try to, encourage more people to have cost seg studies done. And I want to allocate depreciation on the capital account statement quarterly, because that's where you see the benefit. Look how much income we allocated to you. Look how much depreciation was allocated to you. And look how much distributions were sent to you. Isn't it a beautiful thing when you've got more depreciation than you did income, net income? And then to see the fact that you've got depreciations that, distributions that are equal to that. I mean, that's tax-free money. That's a very, very, but no one's really even doing anything to tell the story and further the story to the investors.
Right. Well, to your point, I actually do have recently, it has been a very recent thing that a lot of my clients who are syndicators and are kind of putting together these funds and putting together these investors and are pretty proactive in how they communicate with their investors on a monthly or quarterly basis, are oftentimes asking me to kind of work with them to create something like that so that they can share with potential investors or a potential project coming up to include the depreciation, to include the cost segregation. Now, obviously, this is on an individual basis, so you're talking more on a broad scale. But I think it's important that this is being discussed, and it's something that is being brought to the forefront because it's so important. Like it can literally make the difference of of 5, 6 figures or 7 figures of income, right, on a given year for that individual taxpayer.
Yeah, no, definitely. And that's what I mean. It's just it's hard to, it's hard to further this story about its benefits if it never appears visibly, in front of anybody. I mean, it's what I mean. Like I'm all about that. Like it's, I love to tell, but I'd rather figure out how to show, because that's what people respond to, is seeing something. Oh, okay, you were talking about that. Now I can see it and see the benefit. And then it starts to make more sense. So, so the other thing too, I've heard is just, and I'm not, I don't know, once again, I don't know a ton about it either. I mean, I understand at a high level and its benefits and those things, but so I've heard that, not all cost seg studies are created equal. Right. And so, and I'm assuming that means that, some people are out there sort of selling low budget cost segs, services or something versus those who aren't. And I guess it's been framed as, hey, there is some risk here, right? That if you use someone, that the IRS could come back and basically, once again, this is what I don't understand. Like, what if I use some low budget cost seg provider to do the study? What is my risk? Like, what could happen to me if it was done incorrectly?
It's something that in the cost segregation audit techniques guide, which is the literature the IRS published to give guidance on how to properly do a cost segregation study. And, I recommend anyone check that out if you want to read up a little more on this. In there, it lists different methodologies of how to prepare a cost segregation study, how to do it. And so there are actually several different methodologies that are listed there. There's only one of them that is considered, in the words of that guide, a quality cost segregation that is essentially audit proof, meaning it follows all of the guidance, all of the rules. And this is what, our company, Madison Specs, and, many of the other national companies that are doing this, have been doing this for a decade or more, are doing this. And it requires an engineer-based study. It has a whole list of qualifications of, things that need to go into that study, including a whole numbering system, a whole nomenclature that needs to be used accordingly, backing up to tax case history to explain, each asset class and how that fits in, et cetera. This creates a huge report, which is fully defensible in the event of an audit. Now, I will just take a step back and say that doing a cost segregation study itself does not raise any eyebrows and is not something that will raise any red flags or anything like that to get you audited.
Right.
However, in the event of an audit, you're going to get everything checked out. And if you have a cost seg study that is not up to par, then it will get flagged, obviously, and will get thrown out, which will come with, penalties and fines and interest and all that good stuff. Now that's kind of setting the framework. There are some fly-by-night, companies, kind of secondhand, people that are just trying to get this out without the proper documentation that's required. There are even accountants out there that are just kind of doing this, kind of winging it, and just coming up with numbers without actually doing a proper study. So they'll say, well, a cost seg study will get you a 20% reallocation to a 5-year property, asset class, which can get you, huge tax things. So they'll just say, well, I'll just claim 5-year, allocation to 20% of the property, and without actually backing it up. Okay. Now, again, that's not defensible.
Yeah.
There are even some companies that have created things that are like algorithm-based studies, which are done not by actually viewing the physical property, not by actually studying the physical property, which is required in that quality cost segregation study. Mm-hmm. And they're just kind of basing it off of averages, or basing it off of, like I said, like an algorithm, like they've done X amount of studies. So they figure, this property is going to be similar, and they'll create a report based on that. That won't stand up in the event of an audit. So it's something, it's not a do-it-yourself type thing that can be done. It's something that requires those proper, qualifications.
Yeah. So the good news, it sounds like, from the consumer's side of things, it really isn't that difficult to tell the difference between someone who's legit versus someone who's not. Right. It's one, there's going to be a report, a full-blown report that needs to be prepared. Therefore, you can request an example report and ahead of time. And then two, if they haven't found their way to show up at the site of the property, that's the other good sign that it's probably not legitimate. Like, right. Someone's going out there and making, and checking things out. This is So Got it. Yeah. I mean, I hear those things and I get it. And I know it is frustrating, especially when, for business developers or whatever, when you're trying to, you're trying to do these things that, of course you get into it and you know that there's a difference, but it's hard when you're selling complex technical things to people who, like you said earlier, that oftentimes they don't care about them. Like, it's accounting or it's whatever. It's just, it's challenging to get them to stop and think through why there is a difference from, a good provider versus a bad provider. So
Sure.
That makes sense. Cool.
Yeah. And what's unfortunate, just to kind of reiterate the point you made, what's unfortunate is that people don't know any better. And again, this goes back to the premise that the reason why a lot of people don't get this done in the first place is because they just don't know about it. And couple that with the fact that they're being told something that they don't know any better, that maybe this is good, maybe it's not. I try to be as transparent as possible and try to give all the things, talk about, why this is good, why this, is not so good, all the things that are right there, clear, black and white. Some people are just kind of selling a service and they may not be as transparent, not try to give all the information as necessary up front. The consumer who may not know any better is unfortunately going to be falling prey to that. And this, I think, is not unique to what I'm doing. This is, I found across the financial gamut, of financial service providers, this is kind of something that is pretty common. I mean, unfortunately, pretty common.
Yeah, no, I agree. Cool. Well, yeah, it's been really great catching up with you. I'll certainly try to do my part to help spread the good news, so to speak, about cost seg studies. Yeah, keep up what you're doing, man. It's great to sort of see you pop up everywhere. And I think you're going to make an impact, right? So if anything else, more people will know about it. And I'm sure that the benefit will accrue to you and the firm you work for, as well as others.
Absolutely. Thank you again, Lance. It's been a pleasure.
All right, man. Have a great week. Take care.